You're watching Silver News Daily. Subscribe for more.
Did you know that John Rubino is forecasting a silver price surge that could shatter all records? You might be thinking, silver hitting all-time highs? Sounds impossible. But hang tight, because in today's video, we'll break down exactly why silver, a metal often in gold's shadow, is about to get its moment. From massive industrial demand to silver's role as a safe haven asset, every trend is pointing to an explosive run. So if you're serious about understanding this opportunity, stick around, because you won't believe what's on the horizon for silver prices.
Well, there's a lot of stuff going on in the world that would normally point to precious metals going up, but it's been such a long time since precious metals have really rocked that it still feels like a surprise, like, why is this happening? But, if you look around the world, we're on the verge of World War III in three different theaters. The BRICS countries are meeting this week. Actually, they might be meeting as we're speaking right now. And they've hinted at a lot of things that might be important from a global monetary perspective. They kind of fooled us last year, so I wouldn't get too excited about what's happening there. But it's definitely a real thing. And with the amount of gold that BRICS countries' central banks have bought in the last year, it's not inconceivable that they do some kind of gold-backed currency related thing. So that would be a very big deal. The central banks of the world are starting to ease again. We're in an easing cycle with the U.S. central bank just doing a 50 basis point cut, which was, it was on the high side of expectations. So everybody assumes we're in an aggressive easing cycle right now. And, all of those things point to higher precious metals. It's the kind of environment where money flows into safe havens and investment or inflation hedges, things like that. So I guess with all that stuff going on, we shouldn't be that surprised. But it's a pleasant surprise. It's really nice to see gold moving into totally uncharted territory, and silver starting to pick up and outperform gold in a percentage basis. So I think the question now is, well, I put it this way: the stackers of the world and the gold bugs of the world are now getting into the range of that problem everybody wants to have, is that when do we take profits on the thing that we bought that's going up? And that's an interesting discussion right now. I'm going to post something on it on Substack, but I can, spoiler alert, I'm not going to say anything definite, because there are a lot of reasons to hold, and there are always good reasons to take some money off the table when something you bought has gone up. So we'll have to see.
To understand why silver could skyrocket, we need to look at its unique double role. It's not only a critical industrial metal, but also a safe haven during uncertain times. Picture this. Silver is essential for everything from solar panels and electric vehicles to advanced electronics. Yet it's also in demand as a safe asset, especially as global tensions rise. This combination has created a perfect storm of demand, unlike anything we've seen before. So what does that mean for silver prices? Keep watching to find out.
India doesn't feel the same sense of urgency that maybe Russia does, because we're not targeting India in any meaningful way. And so they're able to look at the complexity of having a new currency and maybe consider the downsides. And so far, they've come to the conclusion that it's not time yet. But it's possible they'll come around when they see some of the benefits of it, or the U.S. does something that makes India think, well, maybe we're next. So that could happen. But yeah, India is one of the reasons why. If you don't think a BRICS currency is coming, that's why, because India is a crucial part of that process. And if they're not on board, it doesn't happen. So, again, we'll find out in the next couple of days where these guys stand, if they make any public votes or anything, or put out any press releases that explain their thinking and their actions. So we'll have more information then. But right now, all we can do is watch and see a process unfold that is unfolding. And the main question is the speed at which it unfolds. And this current meeting is going to give us some clues in that direction.
Now, let's dive into a little history. Silver's journey through the decades has been nothing short of a roller coaster. from reaching heights in the 1980s to crashing down, only to spike again in 2011. But there's one constant theme here. Silver thrives during economic uncertainty. And today, we're looking at another key factor, the market deficit. This year alone, silver demand is expected to outpace supply by a whopping 215 million ounces. That's right, 215 million. And this deficit isn't new. It's been building for years, creating a foundation for prices to rise even higher. Now think about it. We're in the fourth consecutive year of this structural deficit, and every time silver stockpiles shrink, the pressure on prices intensifies. Why does that matter to you? Well, a sustained deficit means silver could be on the verge of another historic price run. Imagine if supply can't keep up with growing demand from industries and investors alike. Could we see silver soaring past its last peak? Stick with us because the numbers ahead might just surprise you.
Our non-military weapon here, we can just say, well, kind of what Trump is saying right now. We're going to put massive tariffs on all your imports, or we're just not going to buy stuff if you don't, if you don't hold dollars as your reserve asset and you don't demand trade in dollars. Why should we bother with you? And that's a very powerful weapon because China requires export markets, and the U.S. is the biggest export market. So yeah, that's the kind of thing that could happen, and it could be really disruptive. So we'll have to see how it goes. Now, presumably the BRICS know this, right? And so they have some plans in place. And right now, China and Russia and India are selling a lot of their exports back and forth with each other. And those are fairly big economies. So they can take up some of the slack if they consciously do it, that the US is leaving if we just step away from China as a trading partner. I think most people hope it doesn't get to that point because there's still a lot of stuff that China sells that we need. And Taiwan, right there next to China, is a crucial piece of the semiconductor supply chain. Russia's oil, oil is fungible, and so is natural gas. So wherever it is sold, it affects the global price. So, cutting off Russia's ability to export oil and natural gas would be really disruptive for the oil market. So, none of that stuff is good, even for the U.S., even if we see it as the least bad alternative. But it's the kind of thing that happens when countries go a little crazy. And right now we're entering that period, like before World War I or World War II, where really bad decisions are being made for really ambiguous reasons. And because of that, you can't say with any kind of certainty that the logical choice is going to be the thing that people choose going forward. So I think, yes, China really needs us, but will they bite the bullet and just give up on U.S. markets? Who knows? It's within the realm of possibility, and that would be really disruptive.
Let's turn our attention to one of the biggest drivers of silver demand today, China. China's appetite for silver is nothing short of colossal, especially as they lead the world in green technology. Here's the catch. China manufactures most of the world's solar panels, and silver is a critical component in these panels. In fact, over 90% of global solar panel shipments come from China. With the race to renewable energy only accelerating, China's silver demand has skyrocketed, reaching levels that were almost unthinkable a few years ago. But it's not just solar. China's growing tech industry needs silver for everything from electronics to electric vehicles. This ravenous demand has already set silver on a powerful upward trend. So, as China continues to expand its renewable energy capacity, how high could silver prices go? And with such a huge player constantly pulling on the market, will global supply be able to keep up? Let's break down what this means for the silver market going forward.
Still, the BRICS are doing real stuff, and they do have incentive to do something big this time. So it wouldn't be a surprise if they did something that got categorized as an October surprise in a lot of headlines. But we'll have to see. I mean, there are a lot of technical reasons why they're not ready yet. What they're trying to do is not simple. And they are not as financially, technically sophisticated as the West. So there's no guarantee that they could run their own gold-backed trading currency in a way that worked for them. So we don't know. Um, but I think the long-term trends are pretty much in place. A lot of the rest of the world wants to stop using dollars as reserve assets and in trade. And they're finding ways to do that. They're cutting bilateral trade deals with their trading partners and just trading in their own currencies. And this isn't an ideal situation because a lot of those currencies aren't the kind of thing that you want to stockpile if you're a trading partner, but it's still something that they've been doing. They're accumulating gold, they're cutting more bilateral trade deals. I think the trend is pretty clear that half the world's population and a big chunk of the world's natural resources and military might are all heading in that direction. They're heading away from dollars and towards some kind of a parallel, separate monetary system. So what we end up with at the end of this week is unpredictable, but the trend is in that direction is pretty much baked into the cake. That it's going to be over the coming decade a lot of news on the BRICS front, unless the U.S. does something really aggressive and to short circuit the BRICS. And I wouldn't put it past us, but I don't know what they're planning. But I think that'll be a tempestuous process because the U.S. considers the the dropping of the dollar in favor of other currencies as kind of sort of an act of war. And if it wasn't China, Russia, and India doing it all at once, I think they would be picking fights all over the place right now.
Silver isn't just valuable for its beauty or as a store of wealth. It's also one of the most versatile metals in modern industry. Think about this. Silver's unique properties make it nearly irreplaceable in sectors from high-tech electronics to advanced automotive manufacturing. Its high electrical conductivity, durability, and resistance to corrosion mean it's essential for products we use every day. Your smartphone, your car, and even your home appliances rely on silver to function smoothly. But here's where things get even more interesting. Demand for silver is soaring in green technology applications, particularly in solar energy. New generations of solar panels actually require more silver than ever before, and with nations pushing to meet renewable energy targets, that demand is only climbing. The automotive sector is also stepping in. As more electric vehicles hit the roads, each one needs a substantial amount of silver to support advanced electronics and battery systems. So, with silver in higher demand than ever across such a wide range of industries, what happens if supply doesn't keep up? Will this intensifying need lead to shortages, or could we see prices hit unprecedented highs? Stick around as we uncover the forces that could send silver on an unstoppable rise.
Three or four points here with the BRICS. They have more urgency now to evade dollar hegemony than they did a year ago, because in the intervening year, the assets of Russia that we froze have now been confiscated and spent on the Ukraine proxy war. And a lot of other threats are out there being made. The Ukraine war in general has heated up. We're sending them weapons that can strike deep into Russia right now, and there are rumors that we've got boots on the ground over there. And then North Korea is sending their own soldiers to fight on Russia's side. And so the world is heating up in a very intense way. And the fact that the U.S. tends to use the dollar as a weapon in its many conflicts in the world means that it's more likely to weaponize the dollar against Russia, China, India, whoever else wants to stand up to them in the BRICS coalition. And that gives the BRICS countries an incentive to hurry up and get this thing done, to just start trading with each other with their own currencies, and not holding dollars as reserve assets, and just basically bypass the whole dollar-centric world, because that protects them from the U.S. using the dollar as a weapon. So, they've got an incentive with this meeting to announce some pretty serious things. But last year they fooled us. See, this is the problem, because they had some obscure Russian operative announce that they were going to come out with a gold-backed currency. And then everybody got all excited. It's all we talked about for the 2 or 3 weeks leading up to the BRICS meeting. And then they didn't do anything like that. Although they did, kind of in a piece of misdirection, they did announce that Saudi Arabia was joining the BRICS coalition, which was a pretty big deal. Not as big deal as a competing gold-backed currency, to evade the dollar with, but
Now, let's dig into the geopolitical side of things. Silver is seeing a rising risk premium as global tensions escalate. Historically, during times of crisis or uncertainty, investors flock to safe haven assets like gold and, yes, silver. With conflicts in the Middle East and ongoing tensions in Eastern Europe, demand for silver as a store of value is climbing alongside gold. It's not just individual investors either. Nations themselves are stacking silver and other precious metals as a way to hedge against potential economic upheaval. Here's why this matters. Silver's price isn't only tied to its industrial demand, but also to its role as a financial safety net. When the world feels unstable, people seek assets that aren't tied to any one currency or government, and silver fits the bill perfectly. So, in an era where political uncertainties seem to grow by the day, could silver's safe haven demand push it to new heights? And more importantly, how might this play out in the coming months as silver's dual demand creates a powerful price-driving force?
here's what I mean, fundamentally, gold and silver should be way higher than they are right now. So yeah, I anticipate them going up, maybe irregularly, but steadily over a long period. I think gold goes to 10,000, silver goes to a couple of $100 an ounce eventually. But what worries me right now is that, we talked about how the central banks of the world are starting to ease and everything, but normally that brings with it lower interest rates. And the US 10-year Treasury rate has been going up for the past couple of weeks, and it's back up above 4% now. It was in the high mid 3% range for a while there, and now it's back up in the fours. And that short circuits monetary easing if the bond market doesn't participate and goes in the other direction, because that makes mortgages more expensive and car loans more expensive and basically any other kind of debt more expensive right now. And that tends to slow down economic growth, other things being equal. So if that happens, in other words, if the bond market rebels against this round of easing, then we're in a whole different category of interesting, because that's not normally how it works. Normally, the Fed, if they want to, can force long-term interest rates down by buying long-term bonds. They haven't started doing that yet, and that might be the big test here. If interest rates go up and the Fed steps in with a new round of QE, and then the bond market still doesn't participate and go down, then all bets are off. But anyhow, that's the kind of disruption that might interfere with precious metals continuing to go up because long-term interest rates, other things being equal, are deflationary, and they're not good for the inflation hedge thesis. So, and they're not good for economic growth. That could bring about a recession and an equities bear market. So 2025 could be one of those years with extreme volatility to the downside. And that would interrupt gold and silver's bull market, at least potentially. So that's what worries me right now. I think that the fundamentals as they are, other than long-term interest rates, are all bullish for gold and silver. But those long-term interest rates out there are worrying me. So the investment thesis that flows from that is to not get too excited either way. Continue to dollar cost average in high quality miners or physical precious metals or whatever you've been doing. And in the long term, you'll be in great shape because long-term fundamentals for precious metals are super positive. And in the short term, if your dollar's cost averaging and the prices go back down for a while, you get to buy some more cheap metal, and that's psychologically a lot more healthy than jumping in with both feet on either side of this equation right now.
Now, let's talk about the impact of the Federal Reserve and those all-important interest rates. Here's the scoop. When interest rates are high, non-yielding assets like silver and gold often lose some of their shine because investors can earn more from bonds or savings accounts. But as we're seeing hints that the Fed might lower rates soon, this could open the door for silver to shine even brighter. Why? Lower rates reduce the appeal of dollar-based assets and can weaken the dollar itself, making precious metals more attractive as a hedge. This shift is huge for silver. If the Fed follows through with a rate cut, the lower interest rates make it easier for investors to justify holding silver as part of their portfolio, especially as inflation and economic uncertainty linger. So are we on the brink of a rate environment that will send silver soaring? And what happens if the dollar weakens as silver demand keeps building up? The pieces are aligning for silver to add its moment. Let's see where this could lead.
Exactly what it's supposed to do. It's supposed to protect purchasing power. So it goes up when the dollar loses value. Not, month by month, but over longer periods of time. And that's what we've seen happen. And what gold is doing now is anticipating trouble in the future because it kept pace and then some with inflation up till now, and now we've got official inflation at a lower level than its peak during this cycle, but gold is still going up dramatically, and what it's saying is that more trouble coming. The gold market. Well, it also has a couple of big whales that are new in this market, and one is central banks are suddenly buying gold, and that's part of the currency crisis thesis that a lot of countries just don't trust the U.S. dollar anymore. They don't want to be having to choose a side by keeping dollars as their reserve currency, and they want something that's neutral, so they're buying gold. That's putting a wind at gold's back. And then you've got sovereign wealth funds that are starting to buy gold, which are almost as big as central banks. They're really huge. You've got money flowing into gold via physical ETFs, which is fairly new. There was a couple of years there where retail buying wasn't a big deal in the gold market, but now that's starting to happen. So basically, the global financial system is saying that we have trouble of some sort ahead, and whether they're looking at the currency war with the dollar versus the BRICS currency, or we're looking at World War III, where the US and Russia end up in a shooting war over there, or wage inflation. There are lots of different reasons to really want to own precious metals right now. And there's no guarantee that the ones we're looking at end up being the right ones. It could be that the aliens are here and they really like gold.
Now, let's bring in the BRICS factor, a game changer that could seriously shake up global finance. The BRICS nations, Brazil, Russia, India, China, and South Africa, are exploring ways to reduce their dependence on the US dollar, and one of the strategies being discussed is a potential currency backed by precious metals. Imagine this. If these powerhouse economies move even partially toward a gold or silver-backed currency, it could ignite demand for both metals in a way we haven't seen before. Why does this matter for silver? Well, silver plays a unique role as both a precious and industrial metal. If BRICS nations decide to stockpile silver as part of a currency reserve, it could drive up demand substantially and impact the global supply in a flash. In a world where silver already faces a supply deficit, an additional demand from these massive economies could send prices soaring. So could this be the start of a new monetary era that pushes silver prices to unimaginable highs? It's a scenario that's starting to look less like speculation and more like a very real possibility.
And we've got not 2% like the inflation target is right now, but 4%, 5%, 6%, because wage inflation is pulling everything else up. And the Fed will probably panic if they see that happen and reverse out their recent easing and start raising interest rates again. So, and we know from the interest costs on US government debt, which just went parabolic, it just went straight up to $1 trillion a year in the last 3 years. We know that we can't handle higher interest expense in really any part of the modern economy. So there's a really scary scenario out there where wages start to go up, the Fed reacts with higher interest rates, that spikes everybody's interest cost, and basically bankrupts a lot of government entities and corporations and individuals. And so we tip over into a 1930s style deflationary crash where we get rid of our debt, but through default when everybody goes bankrupt. So The Fed knows that's possible too. So, if it wasn't the Fed, if it wasn't the arsonists who set this fire in the first place, you could almost feel sorry for them because they're in this box that they can't get out of. No matter what they do to fix a problem, it causes some other even bigger problem to blow up on them. And they're aware of that. So they know that if their monetary policy leads to higher wages, then it leads to higher interest rates, which leads to higher interest costs, which blows up the system. And they know, on the other hand, if they push interest rates down to keep interest costs manageable, rising wages are going to cause inflation to go out of control. It'll be much worse than 2022 when we had almost 10% official inflation, probably 15% real inflation. They know those two things are out there waiting to happen. And they don't have the faintest idea how to stop it. All they can do now is choose a crisis. And so to get back to the wage inflation thing, I think the dock workers strike is a big kind of canary in the coal mine event where, all right, we see this happening. It is for real. 62% wage increases are happening out there. And every union who's seen that is going to want its own version of it. So we're going to see, extreme inflation coming from that sector, from the wage sector. And it's a question of what the Fed does. But whatever they do, it'll screw things up and they'll get blamed for it, which is as it should be in this kind of a world.
Let's talk about what makes silver so appealing to everyday investors. It's often called the poor man's gold. Here's the deal. Silver is significantly cheaper than gold, making it more accessible to a broader range of investors. This affordability allows people to build up a silver portfolio over time without needing a massive upfront investment. And there's another advantage: silver's flexibility. Unlike gold, where selling even a small portion might require cash in a high-value piece, silver can be easily divided. This means if you need liquidity, you could sell a part of your silver holdings without breaking the bank. But here's why that matters now more than ever. As economic uncertainty rises and silver's industrial demand grows, more retail investors are turning to silver not just as an investment, but as a safeguard. And with prices expected to rise, silver could be the perfect entry point for those looking to protect their wealth. So will silver's accessibility and flexibility make it the go-to metal for investors in uncertain times? It's looking more likely, and the ripple effects on the market could be huge.
That's an interesting part of a big coming story. And the background is that for about 30 or 40 years there, corporations were gaining power because of globalization. They were able to lay off their US workforce, send a factory over to China, and then make a lot of extra money because they were paying people next to nothing. And then they'd give their CEOs massive year-end bonuses for great leadership and stuff. But it basically abandoned a whole generation in the US of people with high school education who work with their hands. And they found out once they lost their union job, the only thing waiting for them down there was McDonald's or Walmart, so it ruined a generation of people. And now globalization is ending. We're bringing the factories back, and that's handing power back to the unionized workers who've just totally been screwed over for the last 30 years. And they're demanding what was stolen from them back, and so they're striking. And US corporations now have to settle for nice big wage increases. The auto workers had that happen. The airlines have had that happen. And now with the dock workers, we got something extraordinary where the dock workers struck for like 2 days. It was one of the really short strikes in labor history. And they got a 62% wage increase, 10% a year over 6 years. Now, that's phenomenal. That's great news because those guys deserve to make back what they would have made if we hadn't tried that multi-decade experiment in globalization and kicked or crushed all our unions. But the downside of that is something called wage inflation. Now, the Fed does not see rising stock and house prices as inflationary. It sees that as asset prices going up, which increases national wealth. So they think that's a good thing. They don't consider that inflation, but they do consider higher wages as inflation. They call it wage inflation, and it's something they're terrified about. So if US workers start getting double-digit wage increases, then the way the Fed calculates inflation,
Here's where things get really interesting: the ongoing supply deficit in silver. For the fourth year running, demand for silver has far outstripped what's coming out of the mines. In 2024 alone, the market is expected to face a staggering shortfall of over 215 million ounces. But here's the kicker: analysts are now warning that above-ground silver inventories, the stockpiles we have readily available, might only last 12 to 24 more months at current demand rates. Think about what that means. As industries and investors both rely on silver, the market could hit a point where there's simply not enough to go around. And when supplies tighten that dramatically, prices don't just climb, they can skyrocket. So, could this dwindling stockpile push silver into a new price territory? The potential for a major supply squeeze is real, and it's one of the strongest arguments yet for silver's bullish outlook. Stay with us because the stakes and the prices could go much higher from here.
okay, those two things point in different directions. The housing market is kind of frozen because there's a lot of pent-up supply, but that hasn't hit the market yet. And there, there's a fair bit of demand, but from people who can't afford the average house. So what has to happen is, and is happening gradually, a lot of new inventory is coming onto the market. Some people are thinking, well, I just got to sell at whatever I can get for it. And today's price is excellent. Let me try for that. But of course, those houses that are priced at today's market levels won't sell because they're unaffordable. The average person can't afford that average house. So the way this normally works in the housing cycle is that you reach this point, and then all of a sudden, the people who are trying to sell start to panic and they start cutting their prices, and they just need to get what they can get. And until home prices drop then to the point at which they're nice and affordable, maybe even cheap for a lot of people, there's nowhere for the price to go but down. And that's deflationary. If house prices are tanking and very few houses are selling, and a lot of people are taking big losses on their real estate portfolios, you got a lot of entities in the housing market that aren't just individuals owning houses. You got all the Airbnb entrepreneurs who bought little real estate empires and now are having to sell because those empires are not making them the cash flow they need. And you got Wall Street that was the big buyer of single family housing for like a decade. They would come in and buy entire neighborhoods at 20% over the asking prices. And they are not nearly as profitable as they expected to be. So they're going to start selling their houses too. And then boomers, my generation is approaching an average age of 70 right now. And most of us are still, or a lot of us are still in the houses that we owned in our 40s. Those houses are wildly appreciated, but they're also like 2 and 3 story houses. And we got hip issues and things like that. So we're going to need to start dumping our houses at some point, or we're going to have to invite the kids and the grandkids to come stay with us. And they're going to leave the rental market or the starter family house market. And that will hurt a different segment of the real estate market. So however it works, rising inventory is going to push house prices down.
As we wrap up the factors driving silver's rise, let's talk about the market sentiment and recent price predictions. Analysts across the board are starting to project higher and higher price targets for silver, with some predicting it could reach $35 or even $50 per ounce in the near future. Why this optimism? It's all about the perfect storm of demand and limited supply. With increasing calls for silver from both the tech and investment worlds and a steady deficit in production, the outlook is bright. But it's not just about industrial use. Investors and big financial players are taking notice too. As the market begins to anticipate even higher prices, sentiment alone can push silver upward. When more people believe in silver's potential, they buy in, creating a self-reinforcing cycle of demand. So are we on the brink of a price explosion that could match, or even surpass, silver's past highs? This isn't just speculation anymore. It's a market trend that's gaining momentum every day.
And they're doing the buying. But it doesn't matter in the end which one of the main forces that are at play right now end up being decisive. It's as long as the net effect of this is to make the price go up, then everybody's getting what they're going for. All the people who are buying gold out there are seeing their thesis be validated, even if it's a different thesis from some other group that's buying gold. But that's what happens when you screw up a financial system. There end up being lots of reasons to protect yourself from the impending screw up. And whatever you focus on, as long as it's telling you there's a big crisis coming and you act accordingly, then you were right. And I think that's where we are with precious metals now. There are just a lot of reasons why gold and silver should be going up. Oh, and we haven't even talked about gold as an industrial metal. Gold is a monetary metal that tends to trade broadly in line with gold, or I'm sorry, silver is a monetary metal that trades broadly in line with gold, but it's also a industrial metal that is used in a lot of things. Solar panels use a little bit of silver, and the solar demand for silver has been growing dramatically. The military uses lots of silver, and since all the military budgets of the world are way up, presumably all those missiles that are being built are a big factor in the silver market. So it goes on and on. Oh, and of course, electrification. As we build out the AI infrastructure, all those chips and some of the electricity transport require silver. So that's something that's just brand new. The AI boom is like 2 years old, if even, and it's already becoming a factor in the silver market. So, and silver is it's in deficit right now. Even at today's level of demand, the world's mines aren't producing nearly enough silver to supply that demand.
So, with all these factors aligning, could John Rubino's prediction of record-breaking silver prices really come true? Absolutely. When we consider the powerful combination of silver's dual role as an industrial essential and a safe haven asset, coupled with a global supply deficit and mounting demand from both everyday investors and large economies like China, the case for a price surge is incredibly strong. Add in the potential shakeup from BRICS nations, who might stockpile silver as a reserve asset, and we're looking at a scenario ripe for unprecedented highs. The bottom line? Silver isn't just poor man's gold anymore. It's a strategic investment that could skyrocket in value as economic, geopolitical, and industrial pressures converge. If there was ever a time to keep an eye on silver, it's now. Remember, this isn't financial advice, but if Rubino's insights hold true, silver might just be the surprise superstar in the world of precious metals. Don't forget to subscribe so you're first in line for more insights on this unfolding story.
And as demand goes up, it's not clear where the silver comes from. So the deficit will turn into a shortage, which will lead to panic buying. And that's our parabolic final move in the silver bull market. And the way things are going, with the size of the current deficit, it might not be that far away. There was one analyst who did a study about above ground stocks of silver, and he said at today's depletion rate, they're gone in 2 years. So there is no more silver sitting around in stockpiles to augment the amount that's coming out of mines. So no matter how you slice the silver story, no matter what aspect you look at, it's a really good story. So I think that of the really excellent stories out there, like uranium and copper and gold and silver, silver is probably the one with the most upside potential, in part because it's cheap. It hasn't had a big run yet relative to its all-time high, and in part because there are just so many reasons for a default on one of the metals exchanges where they just can't pay the silver out that they've contracted to do, and they have to use cash instead or something like that. And then everybody realizes we're out of silver, and they start buying it for whatever they have to pay for it, and then it goes straight up. So that's a scenario that I think, maybe it doesn't happen before the next recession, and the recession causes silver to go down for a while, but I think it's out there. And I think when it happens, it will dwarf the moves in the 1970s and 2000s, where silver went to like $50 an ounce. I think we see much more than that, especially if there's a default on a metals exchange, which there very well could be. So Silver, a little bit dangerous, very volatile, can lose you money in the short run, but ought to end up making the regular stackers who basically just dollar cost average into it a ton of money eventually.